Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea. How about an extended version? Just some phenomenal conversation. Major shout out to the Fed Decides team yesterday. It was not only the most interesting meeting of the years we've done the Fed Decides, it was the most interesting meeting. I'll say back to the early 80s and Wayne Angell, I'm guessing there. Back to the Volcker years, absolutely twisted. I don't mean that in a negative way, but just a twisted meeting, convolutions, discombobulated. I'll let you pick the right word for it. Markets all over the place during the meeting, and then a moonshot this morning as people tried to figure out a new accommodation by our central bank. We called upon Frances Donald. She's at RBC Capital Markets. Her interpretation of what was wrought.
I felt like it was more like a breakdancing than ballet yesterday because there was a little bit more chaos and not necessarily super clear messaging. It didn't feel like it was very well choreographed in general, or at least there were dislocations within it. What I heard yesterday from Chair Powell, I know you've probably already talked about it 100 times, was there are no risk-free paths ahead. This was a haunting comment from a central banker, but it also reflects the underlying U.S. economy, which is that we are still in the air pocket before we will know the impact of this once in 100-year trade shock that has hit the U.S. economy. It is our view that there are still significant inventories in the United States, and we don't know whether companies will truly pass on those costs to inflation or whether they will have to cut their own costs, and that will come down to labor. And so when you talk about data dependency, Tom, what I'm looking at is one single data point, which is how many inventories are left in the United States and how long until we answer that question, because neither of those paths are good, but they result in very different focuses from a central bank.
Frances Donald on inventories, looking at the tariff impact, which I was shocked was so little discussed yesterday as well. Each former president and, frankly, present president of the central bank, the many of them, have a different character. It was a perfect day to speak to Robert Kaplan, former president of the Dallas Fed, with all of his work at HBS and at Goldman Sachs on innovation, on process, on technology. On the central bank, Robert Kaplan of Goldman Sachs on the Fed and the economy.
I think that the Fed pays attention to financial markets, but it's got to set monetary policy based on the economy. And right now, you have a divergence. You've got regulatory reform coming. You've got tax incentives coming, accelerated depreciation. You got an AI boom. Those three things are not really in the economy quite yet. And so you got a sluggish economy and you have a booming financial markets. I actually think the tailwinds are significant. And so if you're at the Fed, on the one hand, you pay attention to it, but you got to set monetary policy based on the underlying economy, and I think that's the right thing to do right now, and that's what they're doing. This is not one of those stock markets that's being fueled by excess monetary policy, in my opinion. It's being fueled by other structural drivers, and the Fed would do well to recognize that.
Robert Kaplan of Goldman Sachs. On our podcast, on Apple, on Spotify, good morning on the Pacific Rim. Thank you so much for the podcast interest across the Pacific Rim, across Asia as well. And on YouTube podcasts, it's Single Best Idea.